How's it going, everyone? It is Andre Williams, and today we're going to be talking about Roblox. I know many of you have been asking me about that, so I'm going to give you guys my opinion, and also going to be going over an article on it, which really does a great job summing up my exact sentiments around Roblox. We're also going to be covering what has been going down in the market today. Why was it as volatile as it was? Why did we see a lot of blood in the streets, like I say? But now, what I want to talk about is just taking a look at where Roblox is right now. So if we take a look, Roblox ended up finishing the day at $67.30. So it was down 12.36%. We've already seen that it has a 52-week high as $79.10, and right now in after hours, it seems to be around $67.80. And in my personal opinion, this is just me, this is a fair price, but I still see some more room for it to go down. Even though I am interested in Roblox, one thing that I am thinking about doing is actually going to be coming up right when we get into covering what happened in the market and also going through the article. So stay tuned for that. Let's get into it. All right, so we're now on CNBC.com. They kind of give us a brief what was going down inside the market today, and which ended up being volatile and also ended up closing lower than we actually expected, especially since I know many of you have stimulus checks that you're investing with and so forth. So we want to kind of see, okay, what is behind everything that went down today. So the Nasdaq tumbles 3% as soaring yields hit tech shares. The S&P 500 closes 1.5% lower. Okay, so technology shares led the U.S. stock market lower on Thursday as a spike in bond yields fueled concern about equity valuations and prompted investors to sell growth-focused high flyers. The Nasdaq Composite dropped 3% to $13,116 for its worst day since February 25th, as Apple, Amazon, Netflix, and all fell more than 3%. Tesla slipped nearly 7%. The S&P 500 slid 1.5% to 3,915, falling from a record closing high reached in the previous session. The Dow Jones Industrial Average fell 153.07 points, or 0.5%, to $32,862 after hitting a new intraday record earlier in the day amid a rally in bank stocks. The 10-year Treasury yield jumped 11 basis points above 1.75 at its session high, reaching its highest level since January 2020. So these are one of the things we want to keep an eye on, especially in the stock market, because it does have an impact when we take a look at the 10-year Treasury yields. I actually have this bookmarked on my cell phone and on my desktop to continuously monitor it. So we started having concerns literally when it was at like 1.5, and then it started to get into 1.6, then it got to 1.7, and then boom, here we are experiencing what we see today inside the market. So let's continue. The 30-year rate also climbed 6 basis points on 1 point, breaching the 2.5% level for the first time since August 2019. The jump in bond yields came after the Federal Reserve expressed its willingness to allow an overshoot in inflation. Rising rates can have an outsized impact on growth stocks as they make their future returns less valuable. Risk of rates rising too fast remains a key concern, said Greg Johnson, technical market strategist at Piper Sandler. Buying pressure has not been equal over the last several weeks as growth stocks lag behind due to headwinds from high interest rates. Bank stocks outperformed as higher interest rates tend to improve their profit margins. Banks can earn more from the widening gap between the rate that they borrow at in the short term and the rate that they lend out at in the long term. U.S. Bancorp and Wells Fargo's popped 3.3% and 2.4% respectively. J.P. Morgan jumped 1.7%, while Bank of America gained 2.6%. Investors also digested a mixed bag of economic data Thursday. Weekly initial jobless claims totaled 770,000 for the week ended March 13th, worse than an estimate of 700,000, according to economists polled by the Dow Jones. Meanwhile, the Philadelphia Federal Reserve's Manufacturing Index showed a reading of 51.8, well exceeding the Dow Jones consensus of 22.0 and hitting the highest level for the gauge since 1973. The energy sector was the biggest loser with a 4.7% decline Thursday amid a drop in oil prices. And I noticed this right away because I do have stock in Ring Energy, and this was definitely affected by this. So the WTI crude futures slid more than 7% to $60 per barrel, falling for a fifth straight day and suffering its worst day since September. The blue chip Dow closed above 33,000 for the first time on Wednesday after the Fed said it does not expect to hike interest rates through 2023. Fed Chair Jerome Powell reiterated that the central bank wants to see inflation consistently above its 2% target and material improvement in the U.S. labor market before considering changes to rates or its monthly bond purchases. By saying that they're willing to let inflation run hot at a time inflation concerns are rising is another way for the Fed to say that they are willing to let long-term interest rates rise further. Matt Malley, chief market strategist at Miller Tabak. The Fed upgraded its economic outlook, expecting to see gross domestic product grow 6.5% in 2021 and an inflation rise of 2.2% this year as measured by personal consumption expenditures. The central bank's stated goal is to keep inflation at 2% over the long run. So as you can see here, so if you have any interest in regards to bank stocks, it's definitely something to take a look at while we're going through this. But at the same time, this is why it's always great to have a diversified portfolio as well, which I do in my long-term portfolio. All right, so we're going to be reading an article on the recent IPO of Roblox stock. A lot of you have been asking me about it, wanting to know what my opinions are. Am I planning to build out a position and so forth? And we're going to be covering that, but we're also going to be going over the bearish and the bullish side of also Roblox as well, which I love seeing both sides of opinions. All right, so in the past few months, we've seen several high-profile companies go public. One of note is Roblox. Going public via a direct listing on March 10th, the gaming app opened at $64.50 per share, well above the $45 per share it sold for a few months prior in a private financing round. But that initial pop was only the start. Since then, the stock has trended higher and now trades for around $74 per share. There's no denying that Roblox has a cutting-edge platform in its hand. Plus, with its app benefiting from the COVID-19 lockdowns, 2020 was a banner year in terms of growth. The underlying business itself looks promising, but valuation is a concern. Sure, with its high levels of growth, this is a stock deserving a premium valuation. Yet, richly priced out of the gate, it may be best to take a wait-and-see approach with this recent initial IPO. Eventually, as enthusiasm for the stock fades, shares could pull back from their recent sky-high prices. At a more optimal entry point, this could be a great long-term opportunity. So Roblox stock and its cutting-edge platform. What do I mean when I refer to Roblox platform as cutting edge? There are scores of free-to-play gaming apps out there, but there's a unique element to this one, a factor that both enhances the user experience as well as provides a company with another revenue stream. I'm talking about the ability for users to craft their own experiences in the game. Not only that, said users can sell their creations to other users with the revenue split between the user, developer, and Roblox. This element has played a role in its success. However, COVID-19 related tailwinds have been more of a material factor. With schools operating virtually and outdoor activities canceled, teens and tweens, Roblox target demographic, have had few options outside of video games when it comes to entertainment. As a result, this platform saw a tremendous boost in demand. Sales in 2020 soared 82% from the prior year to $923 million. With tremendous growth like this, it's understandable why investors have given Roblox stock such its current frothy valuation. But at today's prices, shares are running a bit too hot right now, with the prospect of growth slowing as the outbreak fades. Shares could pull back after a big rally following the direct listing. Why it's best to wait for lower prices. It's understandable for a fast-growing company such as Roblox to command a rich valuation. Yet, even when factoring in growth, it's hard to justify current forward price to sales multiples around 20.2x based on 2021 revenue estimates. Sure, with growth at any price, the market's mantra on 2020 valuation concerns weren't a big deal. But now following the late February pullback, it's going to be tougher for stocks like this one to continue benefiting from a runaway multiple expansion. Especially as it's still uncertain to what extent growth will slow once things return to normal again. The pandemic by itself hasn't been the sole factor behind its record growth. But with so much of it driven by the stay-at-home economy, we may see things slow down in the coming years. I don't see this as a complete deal breaker for Roblox stock. Even if top line growth cools, it's still going to be a healthy clip. With long-term trends on its side, even as we return back to the old normal, expect this platform to continue to scale up. As it's still investing heavily in its growth, bottom line results remain low. But once it scales up and it can take its foot off the gas, expect this to become a high margin business. Investors today are pricing this as if it'll see 2020 levels of growth in 2021. However, underwhelming results in the coming quarters could reverse the stock's current upward trend. But for those taking their time, this may pave the way for a more optimal entry point. Bottom line, sit things out for now with Roblox. There's a big opportunity here for the gaming platform. It saw a tremendous demand boost in 2020 as lockdowns limited entertainment options for its target demographic, teens and tweens, but with the expectation of vaccines paving the way for a return to the old normal in late 2021, Roblox blockbuster growth could slow in coming quarters. If results fall short of expectations, this stock currently still running hot could pull back. That's bad news for those chasing it today, but good news for those waiting and sitting on the sidelines for now. Bottom line, prospects remain bright for this mobile gaming platform, but it's best to wait for an IPO-related enthusiasm to fade before buying Roblox stock. So for my final thoughts, these are part of the reasons why we need to have diversity in our portfolio when we go through market cycles like these. And we also got to make sure that we are prepared. I said it in the last video and I'm going to say it again. There's a popular quote by Warren Buffett. I know I'm not saying it 100% correctly here, but the main premise goes like this. Be greedy when others are fearful and be fearful when others are greedy. So there's any stocks that you've been looking at, now is the time to actually take advantage. And that also makes me want to put in a disclaimer. I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. And in regards to Roblox, like I said, we have a lot of volatility going on. So I'm definitely looking forward to getting into a lower entry point. When I saw it on the day of its IPO, I know it did stay around that mid $60 range, around 64, 65, and then started staying at around 68, 69. So I'm definitely looking forward to get inside the low 60s. So that's an area that I'm going to be looking for. And I'm talking about 61, 60, and so forth. But here's the big but. I got to bring the but inside the room here. I'm not going to be building out a full position as of yet. This is a long-term play, but I want to give it some more time. I know it's still hot. It's still talked about a lot. There's still a lot of demand for it. But I want to see when things start correcting itself. Let's see where the price actually goes before we say, well, you know what, let me take a large position. Because we just don't know where it goes, and we might end up getting a deal. And you guys know how I'm big on dollar cost averaging in regards to taking advantage of certain situations that make your portfolio look more healthier and also be in the right stocks at the right price that is good for you. Okay, so we'll talk soon, and I hope you guys found this helpful. Peace.